All right, guys, welcome to the HPT webinar, where the primary focus of this webinar is to talk about what's working, right? My goal each and every single day is to execute on these charts, but it's to really understand when the market's working and when it's not, right? And the primary focus of today's webinar is going to be you do not need perfection for results, okay? Like when we talk about results, we're talking about we're making more money than we're losing. Right? Risk management, managing your trades well, managing your wins and losses. This is how you take your trading to the next level. Okay, so far for the month of November, we're doing exceptionally well on my cash count and this prop firm, right? And on Monday, the day we're about to talk about, was my best day all week, right? And it's not necessarily like, oh my God, the price action was beautiful. It was literally because I capitalized on this one massive move right here. And that's what I want to talk about today, right? Because you do not need perfection to make money. That is a lie. And I would argue, as a matter of fact, the more you're attached to winning your trade, the worse you are going to trade, right? Like, the more you look for perfection and that perfect setup and all that confirmation bullshit, the worse you are going to trade. I know this very well because I traded my own cash. I still do, but only for a very long time. And what that did was limit me because I only had so much buying power. So when you only have so much buying power, right? Let's say you got $1,000 or a couple $1,000s in your account, you're going to get, it's human nature, you're going to get a little more selective before entering a trade. You're going to be a lot more attached because you're not just going to be able to get right back in. So when I started trading futures, I really started to realize that it's not my job to find the perfect trade. It's not even my job to be right all the time. It's my job to execute on a simple strategy with very little to no emotion. That's my goal each and every single day, right? So what's our strategy? What is it that we actually look for, right? Now, that's the next question. So if I pull up Monday's price action, I got the chart here on the left, 5 minute, and then I have the 2 minute on the chart on the right. And what you'll see here is we get a very strong push off the open, okay? We have these, just to give you guys a little bit more context here for the viewers, we have previous day low, we have open print, we have end of day, and we have previous day high. These are the four main levels I watch every single day. Their primary focus, or their primary goal, is to give me better understanding of the context of the market. That's just a pretty way of saying, is she going up? Is she going down? Is she healthy? Is she unhealthy? Is she choppy or is she fruitful? What sort of conditions do I want to avoid? What sort of conditions do I actually want to participate in? That's what these levels do for me. Okay? So you'll see here, we get a very nice push off the open. We get a moving average cross. We get a red bar that gets ignored. But what I'm lacking here on the 2 minute is I am not getting anything off the 20 EMA. So there is no trade for me. I've realized it's really not always the best, in my opinion, to enter into positions if I'm far away from the 20. Now, I want to touch on that a little bit more later. So we now have ourselves what we like to call an area of value. And all what that is a zone that goes around the red bar that's ignored. This is very important because this is going to, once again, give us more context. Once you have this zone, you now have bullish structure, right? When I look at this chart on the left, on the 5 minute time frame, we have bullish structure. We have previous day high up here. This looks like a great long play. Price comes down and closes below the area of value. Is this bullish or bearish? This is very bearish, okay? This is how we know structure has just broke. This is how we know sellers are a lot stronger than we thought. And also notice here, we're closing outside the 20 EMA, right? This is how we use moving averages. Moving averages are literally God's gift to green earth. As a day trader, moving averages are going to tell you when the market's healthy, when it's strong, and when it's shifting. This is a shift. We closed outside the 20. So sellers got a lot more control, okay? I was able to take a short play right here. Once again, Todd, couldn't close outside the 20. I enter in short right here. My stop goes a little bit above the candle, right? The structure. And I capitalize on not the craziest move, but a nice scalp into this little low, right? So once again, when trading futures, if I'm actually all what I need, once again, bring it back to the fundamentals, is my AOV and my 2-minute 20 being respected. When I see this, I'm entering into the position and I'm going to capitalize on the way down. I didn't get the follow through I really wanted. I took profit. I enter in 2 contracts. I take profit 1. I then add in another one right here. Once again, what are we doing? We're following the process. Okay? My process is area of value, 2-minute 20 retest. This is how I look to trade each and every single day. All right? Price popped up on me, stopped me out, boom. Now I'm waiting. I'm waiting for my next opportunity. Don't really get it, right? Watching the 5-minute here. And one thing I want to point out though is notice how the AOV never broke. Okay? Never broke. Once sellers took this right here, the market stayed bearish. Even comes back up into this zone, right? We get that little false break, and then sellers come over like a bat out of hell. And Todd, talk to me about this candle. Look at this thing. Beautiful. Look at that.
That's it. Study it, learn it, and review it.
Bro, I have.
Test it.
All right, so Todd once again has shed a lot of wisdom and blessed us with his candlestick analysis skills, right? And candlestick analysis, I don't care if you trade futures, I don't care if you trade options, I don't care if you trade Forex, it really doesn't matter. The candle tells the story, okay? So let's talk about this. Right here we have a beautiful cloud, right? What does that do? What's its purpose? It tells us a story. The cloud is green. We know there's a high probability that this might continue. Okay. So for me to go long though, I need an RBI, right? I need a red bar to be ignored. I don't get an RBI. What do I get? A GBI, a green bar right here that's ignored. But what else am I getting? Okay. We are closing outside the 20. Guys, I can't, I'm telling you this one rule. This one rule. If you can't close outside the 20, trade with the 20. If you do close outside the 20, trade against the 20. All right? This is what, once you realize this, you can't unsee it. And it's just going to help you so much. Look at this. And what I really like what Todd helped us understand here was when you get a candle like this that wipes out all the price action to the left of it, this is what we call institutional selling, all right? This is when strong selling, aggressive selling comes into the market. But besides all the pretty language, what this means is opportunity is present. Sellers are here. They just wiped and stomped out all these buyers here who are now in losing positions that are going to start stopping out. Okay? And then price selling off. I'm looking to play off open print. Price comes up, tags open print, okay? Can't close outside the 20. So I enter in short here, 2 ES contracts, ended up paying me over, I think it was around $3,700, maybe more. Just targeting the downside pit number. And this is one thing I'm very thankful for. I traded options for a very long time. And with options, I got really good at holding positions. I have no issue holding to a downside pit number. So trading futures, a move like this is going to make you a ridiculous amount of money. This is a $7 move on SPY. I think that's I don't know how many points that is. It's a lot. But the moral of the story is, how was I able to capitalize on this move? It was literally just because we have open print right here. Sellers controlled it. But how did I know? I knew because they controlled the moving average. The moving average was respected. We got ourselves a green bar that's ignored on the 5-minute time frame off open print. Dude, this was so like blueprint. This was beautiful. So damn beautiful. I got one more thing. One big takeaway from this. Guys, the 20 EMA on the 2 minute got no play. Look, all day. We got some, but nothing was touching it here. Nothing touching it here. So instead of relying on a 2 minute 20, I said, which moving average is getting play? The 5 minute 20, right? And this goes back to what I was talking about earlier. There's no right or wrong moving average. Oh, the 50's better than the 20. Oh, the 5's better than the 9. I like to use the 200, right? Guys, use the moving average that's being respected, okay? It doesn't matter if it's the 5, the 9, the 20, the 21, 22, 25, 50, 200. It doesn't matter. What matters is that you can understand who is respecting it in the present moment. That's what's going to make you the money. Don't be the guy that marries, oh, I only use the 20 or the 9 or this. Like, obviously, you guys know I love the 20. I use the 20 constantly. But what I'm getting at here is you be like water. Be able to identify which one's actually being respected and trade with that one. Okay? I also took a short play right here. Monday was a really good day for me. You guys see? So I was able to really capitalize on Monday's price action. But once again, guys, 70 to 80% of the money I made came from this one trade right here. So going back to the primary focus of this webinar was you do not need perfection to make money. Right?
Josh, if I can bring up something here too.
Absolutely.
That 154 candle.
Where's she at?
Where you got in?
Oh, yeah. Yeah. Right here.
I look for that every day. Just
Right
like we were just talking about earlier in the day.
Yeah.
You get good at spotting these.
So, let me ask you something, Todd. Not to cut you off. So, why this candle specifically? This one.
Why that one? Because look at what you're taking out. Anybody that bought anywhere that lasts 20, 30 minutes, you think they stopping out?
Oh, yeah.
Any buyers that bought that?
They're getting smoked. Smoked.
Look at that candle compared to any candle. It's fat. It's got girth, strength. Look the way it closed.
Yeah.
It's a big fat candle.
Yeah. You know what?
For me, that tells me that's not retail. That's banks. That's piling it. They can hide their orders. They can spoof their orders. The one thing they can't do is prevent from making that candle.
No, they can't. That is an aggressive move. And what I really love about what Todd's saying here is the whole thesis of our philosophy. Identify where people are losing the most money. Okay? Like like when you guys hear me say RBI, GBI, I want you guys to hear people losing money. Okay? Human behavior is very predictable, which gives us an edge in the market. Okay? This is the most valuable concept I've ever learned in my life. Our job as traders is to take other people's money. Okay? This is something that we all must understand. When you lose money, someone else is making money. When you make money, someone else is losing. This is not everybody wins. Okay? This isn't third grade soccer where everyone gets a trophy. The one that capitalizes on the other losing is the one that makes money. That's it. It just is what it is. Now, to make peace with it, I like to say we are money managers. We manage capital. And we're going to lose too. Sometimes I lose. The thing is when I lose, it's much lower than when I win. That is the primary objective, okay? So what Todd's talking about here is how to spot what the banks are doing. The banks are professionals at taking other people's money, okay? So this is why we watch open print, okay? Because there's a lot of volume that goes into this level. When we use the moving average, it gives us the context, okay? We are bearish. How do we know we're still bearish? Because it's being respected. But when it comes to identifying people losing money, This is where we use the RBI GBI, okay? There are buyers getting into the market here, 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 okay? Now, as buyers are piling in because they got demand down here, right? There's, double bottom. This thing's going to rally, right? We all used to be this guy, okay? Well, people are piling into the market here in hopes that we're going to come back up to the high, right? Trade the range. We're going, no, dude. This is bearish. You know how I know? Because the moving average was respected, but more importantly, these buyers are now trapped. Trapped. We've all been in a losing position. We all know it sucks. But now, instead of being on the losing side of the trade, we stay patient and identify where the winners are at, where the bank's at, where's the institutional aggressive selling coming in, and what's it doing to the buyers that previously entered into the market. This is where we get into the market. This is how we capitalize. And this is how I know if sellers held the open, there's an 88% chance we're going to the next pit number. I know this because I've been collecting data on this for the last 3.5 years. Day by day by day. All the data is in the Discord, okay? If and when sellers hold this level, we are going to see this level. It might not happen immediately. It might go up, come down, do this, do that, the third. But I'm going to play my moving average all the way down. I mean, look at these. Green bar ignored. Green bar ignored. Dude, this was blueprint. You know how many times I added into this position? Once again, when you guys see this on Top Step and it says 79 trades, this isn't me getting in and out 79 times. This is me adding into positions, scaling out of positions, adding one here, taking one off here, right? Like that is how you take full advantage of the skills you've learned over here at HPT, right? Beautiful trade. Todd, I appreciate that breakdown, bro. That has changed that you have helped me tremendously understand that better. And that's that candlestick analysis that we've just always talked about, right? Like it's not necessarily like you can't rely on perfection and all those confirmations. What you can rely on is learning how to read the candles in the now moment. Okay? These are the sort of things that are going to help you make a lot more money, right? Like this day. Once again, you guys know I love the 2-minute 20. I love trading the area of value, but we weren't getting it. So what I do, I took a short play right here. Oh yeah, right here. Okay, so once again, I love the 2-minute 20. But what happens when it ain't getting no play? Do I shut my computer down and walk away? No, absolutely not. I ask myself, which moving average is getting respected? And how can I capitalize on it? And this one, once again, was the 5-minute 20. Okay? Price sold off. I understood the context. Okay? Sellers are in control. How do I know this? We got a moving average cross. We got a green bar ignored. Okay? Now, price starts to sell off and we come up into the 5-minute 20. We can't close outside of it here. We can't close outside of it here. So on this candle, when we came back up into it, I was confident enough to enter into the market short. I ended up getting in the market short like right around here and was able to capitalize on this move to the downside. Once again, playing into low of day, right? Like nothing perfect, nothing amazing. But when you're able to get a good entry with a good stop, and then when price comes up and can't close outside the 20, I'm adding in, okay? Like I'm adding into the position as price continuously can't close outside that 20. We did close right here, but once again, we had this pattern where we would close just outside the 20 and then get this bar right here. Boom. Close just outside of it. This bar right here. Boom. So I was able to capitalize on that very well. Oh, and then this was this day. And then I caught this move right. Check this out. So once again, right, like learning to spot those RBIs and GBIs are very important. Okay, what do we get right here? A red bar ignored. Okay, price sells off, comes below it, then pops back up. Anytime you are getting an RBI or a GBI, This is your area of value. This means something valuable is going to happen here. Okay? This is how we have to look at it. What's this? This is buyers respecting the 20 EMA. This is a long play for me. Okay? And once again, area of value, buyers respecting the 20. I'm in long as soon. Okay, I want to be crystal clear here. I'm entering into the market long as soon as the candle closes and it respects the 2-minute 20. Okay? Where's my stop going? Right below the candle that respected the 2-minute 20. Give it a little bit of room. You guys see me on the live. I give it a little room, okay? I'm willing to risk a couple hundred to make 1,000, a couple thousand, playing back into open print, okay? Once again, focusing on risk reward, and then capitalizing. I mean, this was just blueprint. We kept getting them. I took a short play here. This is a really good day trading. Once again, just using our simple approach. But yeah, that was the trade I took. Was this one here, and then this one here. This was I took this trade on my cash account. Once again, right? Like just using our simple tools and concepts to capitalize on price action. All right, so that was Tuesday. Was Wednesday the sell-off? Oh, yeah. No. It was Thursday. Wednesday. Another really good day using our simple approach, okay? Wednesday, we're getting a wild move in the morning. I'm not trading it. It was just not, I wasn't getting any RBI or GBI, so I just didn't want to trade it. That doesn't mean you can't trade it. It's just I didn't want to trade it. I finally get a green bar right here. That's ignored. So what do? Draw my box. Okay? Price comes up to the box. Doesn't touch the 20. Okay? I don't get in. All right? It just is what it is. I wasn't able to capitalize on it. I ended up getting into the market right here. Okay? We come up to the 20. I'm sorry, this guy. We come up to the 20. We can't close outside the 20. I enter into the market short. I put my stop above this candle and I get wicked out, right? I get tapped. Once I get tapped, this happens. We can't close outside the 20, so I'm back in the market short, right? Like, and obviously, if you're a futures trader, this is a lot easier to do. If you're not trading futures, this is something you're going to have to maybe give a little more room on your trades, and so you don't get stomped out or wicked out. But we were able to capitalize on this really nice sell-off right here. And once again, why, right? So come Monday, we know what to do. Identify your area of value. And if you can't close outside that 20, you trade with it. Like, and this is the thing, guys. When, study it. Study what it looks like. This is what it's going to look like when you need to be entering in short. Like, the old Josh is like, bro, what do you mean go short? You're at demand. Look at all these wicks. This is sketchy. But you know what I'm doing? I'm relying on my system. I'm not relying on my emotion. I'm going, dude, right here is an area of value. Right here is a 2-minute 20 retest. We're closing inside. So I'm entering in short right here. Isn't that funny, Todd? Look at this. If you look at this chart on the right, it honestly is starting to look bullish, right? Like, we can't close below, but I still was like, nah, I'm following my system, following my process. I'm getting back in short, and then we capitalize on that move. That's the power.
Yeah, that's what they wanted to do. They wanted to look bullish. You know what I mean?
Bro, Todd, that's so crazy. You're so right. Bro, it's so crazy. Like, the better I get at trading, the more I realize you need to become a pro at doing what you think is wrong. Right? Like, they want to take your money. They want to trick you. They want you to look at this and go, oh my God, I can't go short, but my system tells me to. Every time I follow my system and my emotion is all out of whack, I make money. Like, And even if I get clipped, I get back in. And you know, this trade felt so damn good because the system prevailed, not my emotion. You know what I'm saying?
Yep. Oh yeah, and that 1232 candle right there.
Where's she at? Right here.
And before that, we was getting wicks.
Oh
wicks.
Yeah.
They want,
like
you said, starting to look bullish. And then that candle comes in and it closes at the low.
Wiped it all out.
Oh yeah.
Wiped them all out.
Yeah. This ain't bullish.
Think what was going through the minds of the people in long right here.
Yep.
They're like,
that's how you got to think of it.
And I've been there. That was me. Dude, that was me. I was the biggest supply and demand trader. Oh man, this is demand. Buyers are gonna defend demand. The market's all about supply and demand. Yeah, but not in a range-bound reversal trading sense, okay? Yes, the market relies on supply versus demand. It creates the auction. But that does not mean that it's always going to trade range-bound, okay? The best thing that ever happened to me as a trader was realizing moving averages prevail in a results-oriented fashion. Like, if you want to make money, you trade with moving averages. If you want to be right, you trade supply and demand range bound, and it costs you money. All right, Wednesday. Dude, this day was insane for me. I could have done a lot better. But on Wednesday, there was a point I was down a lot of money. So I sized up trading NQ. Let me see. Wednesday. Yeah, Wednesday I made $161. But on my prop firm, my cash account, I made $800 taking this short play right here. But I was trading 3 contracts of NQ and the NASDAQ, and that can get very dicey very quickly, especially in volatility like this. I mean, these candles were like $2 a pop. But, you know, I'm kind of reaching that stage in my trading where I'm trying to take it a little bit further and make a little bit more money and see how far we could really push these prop firms and capitalize. But, you know, I was able to make, I was down, almost down $7,000 on this day, but I was able to make it back by following these simple principles of GBI, okay? Where we at? Oh, yeah, this is the day I was actually trading the 1 minute, I think. Hold on. So, this is like, now guys, please hear me out when I say this, okay? Don't go switch the way, like, don't hop on the 1 minute because I'm telling you I used it this day. I'm going to explain to you why I used it this day. I used the 1 minute this day because I was trading a much larger size and I wanted to implement our stop loss rule of always put your stop above the previous candle. So this is another thing Todd helped me put me onto. If you are trying to manage risk and you're sizing up, or you know, you have to look at it from a candlestick analysis perspective. The 1 minute is going to help you manage risk a little better because if you're hopping in a short play here, you can put your stop right above the candle. Okay, this is the same thing we do on the 2 minute where we enter into a trade and put the stop above the previous candle. But the reason why I was using the 1 minute this day was because the 1 minute was respecting the 20. Okay, now this is gonna once again use the moving averages that's working and being respected. That's what I did this day. The main thing I want to talk about on this day was the trade I took here. We have a GBI, which creates the AOV. We have a retest right up in here. We have the candle closing outside the 20, then back inside the 20. Very bearish. So now at that point, I was just looking for a short play. So that's when I said, all right, what we gonna get? Check it out, Todd. Price comes into the 20. I just want to flesh this out. Respecting the 20. Losing respect. Respect the 20. Bam, we lost respect for the 20. We wiped everything out to the left. In short, target the low. Boom.